Okay, we are back to Philobusker3C, Part C. This part is on the global economic casino. How we got into the disaster, the banking disaster, financial, governmental cataclysm that we have got going on that's leading into this perfect storm of basically grand theft that we'll discuss over the next little bit. Now, our present economic crisis is the result of several things. One is unchecked greed and banking deregulation that's happened over the past few decades. It started under Reagan, then the Bushes. They've really culminated one way or another with Clinton destroying the Glass-Steagall Act that was put in place after the collapse of 1929, separating investment banks from saving banks and cutting out a lot of the very gambling types of devices within investment that helped to bring down the economy back in 1929. Clinton got rid of this law back in 1999, and that led to the type of collapse that we saw in 2008, where it was a big faked up economy based on all these derivatives, hedge funds, toxic investments, just fake. Everyone's just trying to get a cut, but eventually the cut was a hemorrhage. But the real source of this present banking crisis is a fraud that goes back several hundred years. This fraud is called fractional reserve banking. Now, it began back in the 1600s in Europe by goldsmiths. They were the people who held gold for clients in a safe vault. And they would give those clients as if a promissory note, the check that said, this is how much you've got here, and we've got the gold here in our reserves. So what they would do was, these goldsmiths would, realizing that most people kept their gold there and no one ever took out all their gold at once, and all their clients would never come and get it all at the same time, they would loan out many times more amounts of money with these checks to people that they actually had in reserves. So if they had let's say $10,000 in reserves of gold from several clients, they would loan out $100,000 to people because they knew not everybody would come and get it at once. The problem was when everyone did come and get it at once, they would fold, their whole little fraud would collapse. Most people would lose out the money that they had just been borrowed. Now, fractional reserve banking went from being a fraud to a legitimized economic policy throughout the last few hundred years. Because the bankers wanted to control the issuance of currency, because they wanted to loan out more money than they actually had, they developed this kind of regulation, this policy, that you can loan out. You only needed a fraction of the reserves that you had. So most banks are based on this now. They might have $1 million in reserves, but they can loan out $10 million. Now if I did that or you did that, we'd be arrested for fraud. Somehow when they do that, it's legitimate. You know it's a fraud when if we all go get our money from the bank closes its doors, that means it's fraud. There was nothing there to work with. They stole it from us, they lied to us. It wasn't real, it was fake. It's illegitimate. If it's fraud for me, it's fraud for banks. That's the end of that story. Now, the big banking families throughout the last few centuries, the Rothschilds, the Rockefellers, Morgans, Warburgs, Schiffs, Carnegies, they made it so the laws being passed in Congress and being passed Canadian politics and banking associations completely favored them. Once they gained control of the issue of currency, they controlled how much interest they could charge. They controlled how much money they could lend out based on these fake reserves. This kind of money has led to what's nowadays in the global economy known as money multiplying or leveraged amounts of dollars. So in the Euro zone right now, they try and say, okay, well, we need to load out hundreds of billions of dollars to save Greece or Italy, or not to save Greece or Italy, but to give them that money which goes to their bankers so that they can pay back the loans that are heavily in interest. Remember, most of these loans are not because of social programs or big debts. It's because most of them are 90% interest owed to these bankers who set up the structure in the first place. But they say, oh, we'll print $100 billion. Now we can leverage it up to $1 trillion. Load out $1 trillion fake dollars based on 100 billion fake dollars. It's all fake. It's all going to collapse. Like we said, money is agreed on exchange. Once people start saying this is fake, and they start going to the bank to take their money out, it's all going to fall apart, because it's all a fraud. Fractional reserve banking is a fraud. Canadian banking, American banking, it's all based on this one process that has leveraged money upwards beyond anything that we've actually got. So, you look at something like the world GDP, gross domestic product, is about $60 trillion, $50 to $60 trillion. And yet in the derivative market alone, which is investments based that derived upon other investments, gambles, short selling, betting, is at one point it was 600 trillion. As my understanding now, there's something like 250 quadrillion, which is I can't even figure out those numbers. It's 250 trillions, 2,500 trillions. These are numbers that we'll never be able to understand. Might as well call them zillion and gazillions. They mean nothing. They're all fake. They're all going to collapse. Now when the only way we're going to be able to get in control of this, one of the main architects of this kind of modern fractional reserve banking was Milton Friedman of the Chicago School. Now I think this guy who won the Nobel Prize for Economics was one of the greatest disasters of economic history. But at least he was on one level honest, saying you either have 100% reserves on reserve of money, or you have zero. Either way, if you have zero, you can make as much money as you want. It's all fiat currency. If you have 100% of fractions, 100% on reserve of what you load out, that's what it's backed by. Whether it's backed by gold or silver, which most money is not anymore in the world. Canada got out of gold-backed money back in 1929. It was taken away from the United States in 1971. We're basically on fiat currency. But if you had full reserve backing the money that you loaned out, you wouldn't have to be worrying about a faked up economy, massive amounts of interest debt, and the idea that we could create as much money as we want, but at no point will it affect anybody. It does affect everybody. Everybody's going to get their money stolen. All that money's going to get siphoned up to the billionaires and trillionaires. And they are going to continue to ruin the economy, as they have been doing for the last several centuries. Modern banking and economics is based on fraud. Fractional reserve banking is fraud. Fiat currency is fraud. We're going to get into the solutions now in the next filibuster. So we'll talk soon.